Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. Today is September 12th, 2021, and this is the Uranium Watch List Hourly Charts Edition, and this will be available premium preview for the general viewing public. And really the purpose of this video is not only to give you an idea of my methodology for those of you new to my charting style, but more importantly, to give the premium subscribers who have been invested alongside of Moniology for perhaps 2 years and are doing quite well in their portfolios, to get a sense of where we are in the cycle. We saw last week in the weekly video kind of the longer term perspective. What I want to do here is to show and go through it really for the first time. I only saw the first two charts in this watch list before making this video, and see whether there's some divergences taking place that might give some better frame of reference for what might be taking place next couple of days. But of course, the market is the market, so no one knows the future, but we can create probabilities around various events. So broader context, I believe we are just very, very, very early in this uranium bull market. And I think we're going to see some exponential gains even from this point on in some companies. Problem is, and the challenge is, we don't know which ones those will be. But we all make our bets, and if you want to be diversified, URA, perhaps the URNM ETF will be the best way to go, and you'll do well even if you miss this run up since March of 2020 from last year. But here we are, starting with the URA ETF. Again, this is an hourly chart. Give you some context. This is from this chart is basically, and all these charts will be from early June all the way to mid-September where we are. Notice what's happening here. We've had 3 higher highs on the URA, but right around here we started making a lower high in momentum, and that's something to watch. Now, right at this level, we actually broke this downtrend and we broke higher, but it still made a lower low. Now, granted, we are in an extremely overbought position, but unlike most folks who believe that overbought means a sell-off is imminent, what I've learned and I've taught my subscribers is that overbought means that's where the best gains occur. Look, we went overbought right here around 20, and now we're at 26. And if you had sold just because we were overbought, you would have missed out most of the move, right? So we're back to overbought, but we have negative divergence on the one hand. On the other hand, we've broken out above that downtrend, and we're still in this super bullish overbought range between the 69.1 Fibonacci level. So long as we're above that level, that's good. So we'll see tomorrow, especially with the general market still being a little bit weak. We'll see tomorrow if this is a back test here that results in another leg higher, or this is a short-term fake breakout to the upside and we go lower. If that latter case happens, then I wouldn't be surprised to see us retest this 25 level on the URA, which would be quite healthy, frankly. Don't know if that's going to happen, but that's kind of what I'm looking at. Either we break tomorrow to the upside above the previous high of 26.77, and we tap this particular trend line one more time, and perhaps this 26.50 area will become a back test, or we back test 25. Either way, I'm fine with it, but that's kind of what I'm looking at because, obviously they're going to have to be pullbacks along the way. We just don't know when they're going to come. Let's take a look at the URNM. Similar type of story. So we're kind of consolidating here, but again, slightly negative divergence. And is this just a back test that could draw it this way and then we break higher? Or do we pull back and then some of the momentum and the froth gets out of the sector and we move back towards that 79 level on a back test? On a deeper back test, it is possible we move all the way to 71. There is this gap here, and gaps like to get filled. Frankly, there's a gap here. So if there's a deeper market correction, I don't think we're going much lower than this. I mean, there technically is a gap here. I just don't see us moving that low, but anything is possible. We saw what happened in August, so we have to be open to all possibilities. But bottom line is this chart looks extremely bullish, and I do believe it wants to move higher. I do believe URNM will be a $200 ETF before it's all said and done, perhaps even more than that. So there's a lot more upside, but in the short term, this could be a good consolidation back test towards these levels here between roughly 75 and 80 on the back test. So we'll see what happens, and I'll be fine either way. All right, let's go into the individual names. ALX Uranium. So we broke the downtrend here, which is a good sign. And perhaps we're back testing this level. I think ALX is a really nice candidate here to play catch up. It like a couple of the other names we'll touch on, Forum Energy being another, and I believe Canalaska. They let's put it this way: they're not pure play uranium names, and as a result, they don't appreciate as much, at least in the short term, as perhaps some of their assets merit. So I think that there's going to be a lot of catch up, and I'm personally adding and nibbling on ALX here because when you look at this setup here, we've got a cup and handle, and I think when ALX breaks 10 cents, I think this one's really going to run. So we're not going to go through the weekly chart, but it's got a lot of upside. Anfield Energy, here's a name that really wants to move higher. It's hit our first initial short-term target at 1950, but I think this one's going into once this trend line breaks to the upside, I think this is going to be a double or a triple in the near term from here as well. Notice the MACDs have just crossed zero, so this is a candidate to really push higher to be sure. Appia Energy. So it sold off on Friday. There's a newsletter that recommended getting out of their position. They have the reasons, and I respect those very much. But with that said, we have to respect the long-term chart of Appia, which is incredibly bullish. And again, another one of those. It's not a pure play uranium name. It's primarily a rare earth play. And so you've got this rounded bottom, and you've got this artificial selling because a lot of folks exited the trade. And if this breaks higher here, so this is the emotional exit at all costs. Don't want to be the last person holding the bag. Fake breakdown. We recaptured that. Now we've got a bullish flag setup that I think takes us to 122 here in short order. So Appia is a great catch-up play, if you will. Azarga. So Azarga really, we're going to start deleting it from all of our watch lists, but this has merged or been bought out by Encore. So notice just from a technical standpoint, so we've got a double top here. It was bought out really for 71 cents. So it's not going to be going down much, in my opinion. It's going to be hovering around these levels. But just from a technical standpoint, we've got a double top and we've got negative divergence. However, that second top did break the previous downtrend here. So is this just a back test and it squeezes another penny out towards 71 cents, or does it pull back towards 60 cents here as it consolidates in the anticipated merger? We'll see. Azincourt. So Azincourt, also interesting. So you've got the negative divergence on the one high versus the second previous high here versus here, right? Momentum is lower on the secondary leg higher. However, like I said, the downtrend has been broken. So again, it seems to me it's sending mixed signals, like it's willing to move higher, but on the other hand, it could pull back here as well. So just be cautious on a lot of these names. All right, so Bannerman, I think is the biggest optionality play, perhaps on the entire uranium sector. This one requires the price of uranium to be at $75 a pound rather, and when it does, this becomes a super profitable company, frankly, potentially. Right now, it's obviously more speculation, but what I like about this is you can say it's slightly negative divergence, but really it's in overbought, very bullish territory here. And it did close on the hourly just below 69.1 level. So can it pull back towards 1850? Sure. But I think this would be a strong buy point here. And on a deeper pullback, I don't think this goes below 16. So this would be major accumulation zone. This will be a back up the truck area, in my opinion. This would be a back test, technical back test, and then we're likely moving much higher. I do think Bannerman ends above $1 in the cycle, so it's got a lot more upside. Blue Sky Uranium, very rarely talked about, but it's had quite a move from 16 towards 29 just in a couple of weeks. Again, negative divergence, and the fact that it closed below the 69.1 level, couldn't clear that level, suggests that this one is probably on the weaker side of this move. So a pullback here, perhaps towards 26, wouldn't surprise me. If it hits 24, cents, that could be a buying opportunity. Could even fill this gap here at 23 cents to the downside. So, yeah. Boss Energy. So Boss Energy had one of the largest gains on Friday, and so it had hit this double top on RSI. Couldn't make a new high on momentum. So the fact that it's pulling back here doesn't surprise me. I think a healthy move towards 18.5 cents, similar to Bannerman, would be positive. But if were it to break out above 22.5, then you're making a new high here once again. All right, Cameco. This is the name that I'm most curious about tomorrow because it's getting a lot of traction in the Reddit community. Obviously, it's the largest market cap in the entire sector, and frankly, this is going to be a cash cow. I think Cameco is going to be $100 stock well before the cycle is over. So a lot of upside, and they're going to have so much money they're going to be able to buy out probably half the companies in the Athabasca region where they do their operations. So beautiful since June, rounded bottom here. The neckline, when we broke out above 20 and a half cents, boom, off we went. So we've got this kind of double top here at the with slight negative divergence here. So similar to the URA, I think this could pull back towards 23 here, especially if there's additional market weakness. But if this breaks above 25, I think the next target is 27. If you look at the longer term trend line here from the lows, if you extend this out, this gets towards 27 there. We might consolidate there for a while. So that's really the question: is where does the short-term pullback occur? Does it occur from 27 to 25, or does it occur now to 23 before heading higher towards 27? Nobody knows, but that's kind of what we're looking at here with Cameco. Canalaska. Again, you have to be cautious here. It could not break above the 69.1 level. This is the previous breakdown point from the previous high earlier in September. So it might have to pull back towards the 50 RSI zone. But again, 63 cents to 59 cents to 63 cents. This will be strong accumulation, and I do think I don't have to repeat it. I think all of these are going much higher. The question is, do they go slightly lower first? And we'll find out. Centrus Energy, this is a great name, longer term play. I think this is going to be a cash cow, not a mining stock, but this is part of the conversion process. And so as the demand for nuclear energy grows, I think this is a great name to own. So again, we had triple top here at that 35 level, 34.50, but notice could not break the new high, right? So once we broke there, we could not break it. You extend this out, that becomes resistance around that 69.1 Fibonacci level. So if there is a pullback, this can move towards 31 and potentially even break lower towards 28.5 on a deeper market pullback. So we'll see what happens. Deep Yellow. So Deep Yellow, I like what it's doing here. Created a new high. RSI did attempt to break above the 69.1 level. Couldn't quite hold it, but now you've got the moving averages coming at support around 72 cents. I think this one's going much higher. Looking at its weekly chart, I mean, Deep Yellow just looks really good. So any pullback will very likely get bought. Here's a gap here at around 66 cents. So it might get filled there as well. There's a gap here around 59 cents. I really doubt it, but here's another gap at 53 cents. If there's a deeper market correction, those are the areas that I'd be watching. All right, Denison Mines. So we took the opportunity to close out of our option position here. We had a small position around these levels, so we made out a slight profit, but not as much as we would like, since the maturity was in October. There's a lot of time decay. Look, I think Denison is going to be going much higher. I think it's going to be a $10 stock one day, but at the same time, these names are volatile and can get shorted very easily. So it needs to hold this 150 area. If it holds 150, it's going towards $2. If it can't hold 150, then you're looking at a back into the accumulation zone between 133 and 143 here. I don't think it's going lower, regardless of how the market does. I think Denison's gone much higher. All right, Encore, our biggest holding now, thanks to its big move here. So Encore, let's put it bluntly, I think Encore right now, I think its value should be around the $3 range, possibly as high as $5, because based on my calculations and between friends, I do have a CFA, so I do have quite a bit of valuation experience. And while I don't go into it because this is a technical analysis, show, I do think that valuation matters. And Encore just merged with Azarga, which has perhaps one of the lowest cost ISR mining portfolios in the world, and if not in the world, and certainly in the United States. And it's powerful. And Azarga, looking back, went from 75 cents to $45 back in 2006 to 2007. And now, obviously, I don't expect it to move that high simply because of dilution over the last 14 years. But with that said, I mean, they have such a good portfolio, and Encore has the capital now to really expand on it in ways that the market doesn't anticipate. So you're looking at a company that produces potentially can produce $3 to $5 million pounds of uranium a year. If their margin is $50 a pound, you can make that calculation. But they can be making anywhere between $200 and $500 million in profit, net profit, every single year. And you extrapolate that at a 15 PE, you're looking at a multi-billion-dollar market cap, which would be a 5 to 10x from here. So again, do your own due diligence, but that's kind of how I'm looking at it. But from a technical standpoint, so we had this the merger announcement. We pulled back on a lot of the arbitrage. You've got this rounded bottom. Now you've got a cup and handle pattern that I think moves us much higher on this move. But with that said, we did pull back around that 69.1 level. And again, this is that level where we broke down from this uptrend. Started August 27th. We retested it from the downside. And unless we can clear it back to the upside, I do think it can possibly break down here and move back towards 175, where this would be very strong accumulation. So again, from a technical standpoint, above $2, this is moving higher, and that confirms a next leg higher. If it breaks lower, then we're looking at that 180 level to the downside as support. Energy Fuels, perhaps the most volatile name in the space, which has, I think, some of the most asymmetric trading upside, because similar to DNN, this is one of those Reddit plays that I think Encore might get to when they get publicly listed around November time, seems like. But so we got this rounded bottom breakout. So 560 would be very solid support at the neckline. I think this is accumulation zone if it gets there between 6 and 630. And now this is the trading zone right here. So if it breaks higher above 720, this is going to move. This could be a $10 stock before the end of the week. I mean, this can be really volatile. On the other hand, it did break below the 69.1 level on Friday. So again, a pullback towards potentially 650, 660 wouldn't surprise me. At the same time, a gap up above 720 wouldn't surprise me either. So let's see which way it goes. And that's kind of how I'm looking at Energy Fuels. Baseload energy. So baseload really nicely actually corrected all the way from 81 to 62 cents. This is a great area to be picking up shares of an exploration company backed by one of the key geologists in the uranium space. Now he's actually the CEO of the company. Beautiful back test. You've got the bullish wedge here, and I think this one's going to break higher and not only retest this level, but probably go well above $1 before any serious pullback. So baseload high on the watch list based on this chart here. Fission 3.0. So Fission tried to break out, but kind of lost its momentum. And some pullback here, consolidation around 1650 would be quite healthy. If it does pull back towards 15, I think this would be kind of the back up the truck area because I think Fission 3.0 is going much higher. Speaking of its big brother, Fission Uranium has had one of the best moves off the lows. Clearly, the fundamentals were there, but it was one of the weakest performers in the previous leg higher. That's changing now. So 70 cents here is going to be perhaps 65 to 70 cents would be very strong support if it ever got there. but it may not. Here's a interim support around 88 cents. If it does pull back, it's going to find a lot of support here. So this would be kind of strong accumulation zone here. And yes, it got overbought off this move, but it stayed above the 69.1 level. And so long as it stays above there, I expect new highs on fission before this latest leg of the cycle cools off. Forces Metals, I like Forces here. It didn't create much negative divergence, right? So you have the downtrend breakdown or the uptrend breakdown. You pull back all the way, frankly, towards the 38.2 Fibonacci retracement, but it really nicely tested the 69.1 level, couldn't break it, and now is curling higher again, and it's going to make another attempt. So I think this time, the fourth time's the charm. Above $1, Forces is going to make new highs. I believe Forces, I recall, had like a $5 to $6 target on Tom Fahey's blog back in the day. All right, so our largest, I would say, trading play is Forum Energy Metals. We do own a core position in Forum Energy, then we own a fairly large trading position, which makes it our second largest holding. They've got a number of catalysts coming up, but this is not a pure play uranium play. This is a copper, this is a PGM play, nickel, cobalt, and of course uranium. This company's got a market cap of 54 million USD. They invested $50 million in the last 14, 15 years. Well, frankly, 17 since 2004. Accumulating some of the most prospective uranium mining properties in the Athabasca region. And so you would think that they picked up some good ones. And obviously with the market the way it was over the last decade, not much exploration was done, but they've got some great partnerships with Cameco and NextGen and Orano. You don't get those partnerships, and even with Rio Tinto on a uranium mine. So they've got 8 properties in the Athabasca region, and Ken Wheatley is the chief geologist of Forum Energy. He was the one who mentored James Sykes of Baseload, formerly Appia. So and they together, and he himself was behind some of the biggest discoveries over the last 30 years. So and their CEO came out on, I think it was Friday, there was a interview published with him saying that they think they have a monster in their Northwest Athabasca exploration property, which they're going to be hopefully drilling in Q1 2022. So, we saw what happened with ISO Energy. All it takes is one drill hole, and this could be a $500 million stock, and that would be a 10x from there just on a drill hole or two. But bottom line is, long term, their chart is one of the most beautiful charts out there, which is why we own such a large position. It just broke above this 43-cent zone. I think it's going to be playing some catch up here. It back tested the 50 RSI level, and I think it's setting up for a major break above 50 cents. We posted on Twitter to the public that we think that first move here will get us towards around 57 cents, maybe in the 60-cent zone. But I think this is going to be well above $1 stock before there's any potential acquisition or something like that. So we love Forum Energy here. Hope you do too. Global Atomic. Global Atomic is just a great company to own. But from a technical standpoint, so this uptrend from mid-August technically broke. We back tested this, and it pulled back. So no surprise, this was the breakdown point. Extend that out, that's resistance. So now we got a double top with negative divergence, but we had a hammer pattern on Friday's close. So I don't expect this to go much lower than 360. I would be, if I didn't own this, I would be accumulating at these levels. If you're lucky enough to get to 330, fantastic. But if you don't own a position and you want one, this is the first tranche I would be going for. Above here would be the second tranche. And of course, if it gets to this level, then back up the truck. But I think Global Atomic is going to be a $10 stock before you know it. GoviX. So I posted on Twitter a couple weeks ago when we were here that I think GoviX is going to be one of the best performing companies percentage-wise based on its relative valuation. I mean, this was just dirt cheap. It on this pullback, it basically gave up all the gains of the first leg of the cycle, whereas most of the other names were just down maybe 30%, 40%. This was down basically all the gains. And so they've got a great mine in Niger. They've got great, Friedland family backing this company, and they've got one of the most advanced resources in the world that's going to be producing, and they're profitable at above 50, 55. So if uranium goes to 75 or 100, this is $1 billion company, and their market cap right now is like 300 million, I think, roughly, and at this point was around 150. So bottom line is really good setup. 1, 2, 3. They've got some really bullish candles. This is on the verge of another breakout here. I think it's going to be a 75 cent to 80 cent stock before this cycle, not before this move to the upside completes itself. But look at this accumulation. All right, there's a ton of accumulation here, and whoever sold here, you probably shouldn't be an investor in this cycle, because this was a terrible place to sell unless you sold for tax losses. But I think we're still early, and I think it's going much higher. Okay, so ISO Energy, again, an exploration play that really has some of the best grade exploration out there in the Athabasca region, which is why I like names like ALX, Sky Harbor, UEX, and of course Forum and others, because all it takes is one drill hole. You catch a nice area of the region, and the rest is history. You become eventually $1 billion stock. So this is effectively a next gen subsidiary. So as well as it does, next gen is going to do great. But above 4.2, this is a really nice buy. It's very bullish right now, and very bullish right now. And if it does pull back, if it breaks below the 69.1 level here, I think that this would be accumulation zone. It could fill this gap on a overshoot to the downside around 350. But 420, I think, is healthy pullback. And if it breaks 480 here, I think it's making a next leg higher. So yeah, I mean, it's, again, for all of these, again, we're looking at hourly charts. The daily charts look great. The weekly charts look better. The monthly charts look fantastic. There's so much upside here. It's really hard to fathom. I think it's hard to wrap our heads around how bullish this can get and how quickly. And a lot of us are anchored psychologically towards the previous pain that we suffered over the last couple of months. And so we think that a 50% move is going to be all she wrote, or there's going to be a pullback. And of course, there are possibilities of that, but it could be that you're going to have a 200% move before there's any meaningful pullbacks. So Kazatomprom is setting up really nicely, basing for that next leg higher. Another name that I think, look, it's still in bearish territory on the hourly. I think Kazatomprom is going much, much higher. And so that's great. Laramide Resources, another name that's setting up extremely nicely, similar to Zarga, has a very, very how would you say, very leveraged chart, and that from the last decade. And I think it's one of those names that's going to really surprise people to the upside. Right now, any pullback, 72 cents is likely to be bought, and I think it's going much higher. I expect this leg. I expect this leg to probably see well above $1. But this used to be a $20, $30 stock, I believe. So again, take it for what it's worth. Accumulation is taking place very beautifully here. And this is another one of those names that can partner with Encore because they share a lot of mutual relationships and assets in New Mexico area. Lightbridge Corp, similar to Centrus Energy. This one could really go. I pointed out Centrus Energy, I think, to my subscribers when it was around $4 a share. Now it's around in its 30s, could be well above 100. Well, this is still early, and this I am keeping an eye on. Above 660, this becomes pretty darn interesting to me. If you want to get a value, investment tied to uranium, this is an area to start doing due diligence, because if it breaks above 660, this will be a $10 move towards $10, can move towards $20 relatively quickly. Mega uranium, so this is basically a discounted way to buy next gen. So we got this double top, negative divergence, but the downtrend has broken on the hourly. So I think any pullbacks will be shallow. And if they do occur at all, 31, this is accumulation zone between 31 and 33 cents. And I think it's going higher sooner rather than later. Again, I think mega uranium will be a dollar stock in this. So next gen is going to be, I think this cycle's Cameco in terms of just largest player in the space. I think they're going to be merging. There's going to be a lot of M&A activity with, I don't know, with Fission potentially, with Denison, with other names. I think certainly with ISO Energy. I think next gen is going to be a cash cow. I don't like these names simply because they just spend so much money. But again, you got to get some of the best talent, and that costs money. But bottom line is the uptrend since August 19th was broken. So again, any pullbacks are likely a back test at this point to new highs. So wouldn't be surprised to see next gen above $10 in the next couple of weeks, certainly if the markets are somewhat accommodative. But this is what I was looking for. I was looking for the markets to disconnect from uranium, and that's fantastic. That's what you wanted to see in a true bull market that's backed by fundamentals. Well, the price of uranium shouldn't be impacted all that much if the S&P pulls back. Paladin is another one that's just a huge optionality play on uranium. It's already a producing mine in Africa. It's a huge gap here at 48 cents. So if there is a pullback, this would be the area I would expect it to go back to. There is some negative divergence right on this move here. Whoops. Mouse doesn't want to work. If you kind of extrapolate like this is where the pullback began here back in middle of the week. And if you extrapolate this attempt at a higher high, of course, pulled back right at that level. So again, some consolidation around 64 cents would not be bad at all. It would be quite healthy for a move higher, but we may not get there. So let's see what happens in Australia tonight. Pure Point Uranium. So double top, negative divergence. So I think a pullback on Pure Point towards 14 cents would be great. I think Pure Point is another one of those names, very closely connected to Cameco, I believe, an explorer that can really strike gold, if you will, in the cycle with all their assets in Athabasca. Sky Harbor, really rounded bottom here, finally broke out. 50 cents, this is going to be that neckline here right now. So 50 cents would be kind of back up the truck zone, but I don't think it's going, frankly, below 53 cents. So accumulating here makes a lot of sense. I think Sky Harbor is going towards 90 cents quite soon, possibly as high as 120. Slight negative divergence, but again, this is an hourly chart. So when I get cautious when there's negative divergences on the weekly, not on the hourly chart. Standard uranium. So standard uranium, perhaps one of the weakest attempts at a double top, couldn't quite do it, and of course sold off on Friday in its inability to break above the 69.1 level. So if there is a pullback, I think the first pullback would be towards 34 cents. If that breaks, there is quite a bit of downside towards 28 cents, but this would be a very strong buy zone for standard uranium. Texas Mineral Resources, I keep watching this because we rode this one from 20 cents all the way to 250 in its last move. It's consolidating. It's creating this very bullish wedge on the weekly chart. So once this breaks above 140, and this is more of a rare earth play in Texas, but if this breaks, this could make a very strong move to the upside. It went from 20 cents to $5 very, very quickly last time around. So if and when this decides to turn, this one could be coiling very nicely. UEX Corp. So UEX Corp also had a double top, couldn't quite hold those overbought levels, so it's pulled back a little bit. Now it potentially creates a handle to this cup, and around 49 cents. Consolidates here for a while, and then I think UEX is going to be at above a buck relatively soon as well. Your energy had the nicest candle perhaps on Friday, hammer close on a Friday's close after backtesting the 61.8 level, and I think your energy is perhaps the most undervalued U.S. potential producer in the cycle. So I could see this at $3 in no time. Beautiful rounded bottom here, and your energy, well, keep an eye on it. UEC Corp, nice bullish flag here. I think it's setting up for its next move higher. It's going to be one of those meme stocks. I think if this move does go parabolic, don't necessarily like the company all that much, but as a trade, I think this can go places on very, very sharp moves based on traders. Uranium Royalty Corp, this looks really good. If it breaks above 450 here, I think this is going to be making another move to the upside. And just a way to diversify your direct mining exposure is to buy royalties, right? And these guys do it. They did it really well in the last gold cycle in 2016 with gold mining. And these are the same guys behind UEC as well. So they know what they're doing, and I think it's going to be going much higher. Western Uranium. So Western Uranium is back testing this previous breakdown level. Couldn't quite get there. So I think some consolidation here between 330 and 380 will do it good. But above 380, I think it's making a move towards $5 a share. So that's it for me on uranium this week. But of course, keep an eye on my Twitter feed. We'll be posting and reposting tweets based on what the market does. So best of luck to all of you guys, new entrants. If you're not familiar with our work here at Moniology, check us out on moniology.com or on Patreon, more a la carte videos. And if you like what we're doing, then throw us a little bone in the tip jar. Would be much appreciated. Take care and have yourselves a great week.